Welcome back. Now we are going to solve one problem, that is question number 35, page 1.86. Given below is the receipts and payments account of Tulsan Sports Club for the year ended 31st 12, 2012. Receipts and payments account of Tulsan Sports Club for the year ended 31st December 2012. Balance brought forward: cash 800, bank 7,200, that is 8,000, subscriptions 22,000, life membership fee 16,000, tournament fund 30,000, donations for building 80,000, lockers rent 4,000, sale of all sports materials costing 10,000, they got 6,000, sale of all newspapers 4,000, legacy 20,000, entrance fee 10,000, interest on fixed deposits 708, interest on building fund 20,000. And on the payment side, that is on your credit side, we have salary including 2,000 for 2012 11, 22,000, billiard table 16,000, office expenses including 2,000 for 2013 8,800, stationery 1,400, tournament expenses 32,000, furniture purchase 10,000, sports equipments purchase 12,000, fixed deposits on 1st January 2012 at 12% per annum 11,800. You have balance cash forward, carried forward, cash 400, bank 1,06,308, that is 1,06,708. Additional information: on 1st January 2012, subscriptions outstanding were rupees 1,600, and on 31st 12 2012 you have 1,800. On 1st January 2012, the club had building rupees 1 lakh, furniture 40,000, and sports equipments rupees 28,000. Just depreciation at 10% on these items including purchases. Stock of stationery at the beginning and at the end of the year was rupees 6,000 and rupees 2,000. Donation for building includes rupees 8,000. General donation. Prepared income and expenditure account of the club for the year ended 31st December 2012. So here, when you look at the credit side of the payment, that is salary, that is including rupees 2,000 for 2011. So these accounts are supposed to be prepared for 2012. The year ended on 31st December 2012. So we are supposed to prepare for 2012, for the year 2012. But here I have already explained that in the future the income and expenditure account includes only for the current year and not for the previous year or for the next year. So this has to be deducted. And also office expenses, which is 2,000 for 2013, has to be excluded because this will not come under current year's financial account. Let's see. Salary. First, on the debit side, you have two salary, that is 2,000, 22,000. So this is for 2012. But your question clearly states that 2,000 is included for 2012, 11. Therefore, we are preparing for 2012. Therefore, this 2,000 has to be excluded. You have to subtract this 2,000 to make it 20,000 to get the correct deficit or surplus. Next, we have do office expenses. This office expenses is 8,800 and this 2,000 is for 2013. So it is a prepaid expenses. Therefore, this 2,000 has to be deducted. So you get 6,800. And two stationaries. These stationaries are 1,400 plus 6,000 minus 2,000. That means in your question, when you look at the payment side, it is the stationery comes to 1,400. But in your additional information number C, you can see that stock of stationeries at the beginning and at the end of the year was 6,000 and 2,000 respectively. So this stationery is 1,400. You have at the end is 6,000 and beginning 2,000. So this has to be subtracted and you will get 5,400. And also do loss on sale of all sports materials. This all sports materials on your receipt side, you have this all sports materials costing 10,000, but they have sold for 6,000. Therefore, there is a 4,000 loss. So this sports materials is the cost of sports materials are 10,000. They sold for 6,000. Therefore, there is a loss that is 4,000. And also depreciation. These depreciations are supposed to be provided on the building, furniture and the sports equipments. So the club has a building of 1 lakh, worth 1 lakh. So this, if it is depreciated at 10%, 1 lakh at the rate of 10%, then you will get 10,000 as a depreciation. Before we flip to next page, I'll just explain this also. That is subscription. Subscription is 22,000. So out of 22,000, there was a outstanding in the beginning. That is 1,600. And also there was outstanding at the end of the period, financial period. So you will have to add 1,800. So it comes to 22,200. So this should be the exact amount. Here we are deducting 1,600, which was outstanding in the beginning. That means this outstanding in the beginning is supposed to be paid last financial year, but they did not pay. Though they received during this financial year, they are not supposed to include this. This will go to last financial year. So outstanding at the end of the year, this will be carried forward to next financial year, but it has to be added in this financial year because this amount is supposed to be received during this financial year. So it comes to 22,200. So by locker's rate, they might have given a locker where the customers might have put their savings and have collected a rent for this. So they got 4,000. By sale of all newspapers, that is 4,000. They have sold for rupees 4,000. By general donation, that is given a general donation that is given in your additional information T, that is they got rupees 8,000 as their general donation. By entrance fees, that is the fees that has been collected from the members. Next, we come to the depreciation. Depreciation where they have provided for building, furniture and sports equipments. This furniture was when you look at the receipts and payments account, furniture stood at 10,000. But in your additional information, number A, the furniture, no, and number P, furniture stood at 40,000. So the question clearly states that depreciation is supposed to be provided on the book value as well as the purchases that they have already included. So the furniture stood at 10,000 plus additional purchases, that is 40,000. So 10,000 plus 40,000, depreciation at 10% comes to 5,000. So this is the depreciation value for furniture. Again, in sports equipments are billiards. We have 28,000 plus 12,000 plus 16,000 into 10 by 100 comes to 5,600. So you should not get confused with the sports equipments, that is billiards. When you look at the receipt side, there is a billiard tables which is worth 16,000, and also and sports equipments purchase is 12,000. And also in your additional information number P, you have a billiards table. Sports equipments 28,000. So it comes to, the depreciation value comes to 5,600. So on the income side, by interest on fixed deposits. See, when you look at the receipt side in your question, the last particulars, that is interest on building fund, not interest on fixed deposits, that is 708. So the total amount for the fixed deposits on 1st January 2012 is 11,800, which is at the rate of 12%. So total it comes to 1,416. So this, the amount for interest has been already received. Fixed interest on fixed deposits has been already received. That is 708. 708. This amount is already received. Therefore, this deposits, for the amount of interest on the fixed deposits received as per the question is 708, and accrued, that is they have earned but they did not receive. Therefore, this 708 is not received. It is yet to receive. So total interest on the fixed deposits comes to 1,416. So this transaction starts, their financial accounting year starts from 1st January to 31st December. Therefore, half yearly interest has been already received and the half yearly interest has been accrued but it is not earned. So we are supposed to add 708, which they are yet to receive. So when you total on the income side and on the expenditure side, there is a deficit. There is a deficit, that is 9,108. This amount is, there is no surplus, there is no profit in other words, but there is a deficit, loss of 9,108. So you will have to total on the expenditure side minus total of the income side. You will get a deficit of 9,184. So in this problem, you should not get confused with the sports equipments, billiards tables that is given in your payment side of your question. But the billiards worth worth 40,000 is included here and treated as a sports equipments. Therefore, this billiards tables has been treated as a part of sports equipments. These pillared tables are capital in nature, where they are kept in the office for use. Therefore, this is treated as a sports equipment, since it is a sports club account. So also, entrance fees has been treated as a revenue nature. That means entrance fees. Suppose if there are some clubs, outside clubs who wants to participate in a tournament, they might have paid some entrance fees. Therefore, when the money is paid, it is received and treated as a revenue, as a source of income. Therefore, this entrance fees has been treated as a revenue in nature and not as a capital, because they are paid from the outside source. Excess tournament expenses has been charged to income and expenditure account. Because here, in your question, on the receipt side, on the payment side, tournament expenses is 32,000 expenses, but the tournament fund that is allotted is 30,000. So this is an allotment, and this is an expenses. Therefore, the money allotment is 30,000 and the money that they have expended is 32,000. Therefore, there is a excess of expenditure over the allotment amount. Therefore, it is treated as it has been charged to income and expenditure account, where they have incurred a loss, where they have gone beyond the allotment money. Therefore, there is a loss. So it will come under expenditure side of your debit side of your income and expenditure account. So with this, I finished this question.